Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormus Fatakia. Hey Hormus, good morning. It's been already volatile. It's like we just started trading session, but we have come off from those highs of 24,731. That continues to be a very important level that we are watching out for, because yesterday also we retreated from those levels. Mid caps, they are underperforming today. We do have Bank Nifty, which is lending some support, majorly coming in from PSU banking names. That index itself is up around 3.5% in last 2 days. Metal index supporting as well. Some gains coming in from IT as well for now. So we'll be watching out for all those names, whether that support continues or not. But yes, of course, it's the monthly expiry, so anything can happen at any point in time during the trading day. We've been oversold. Let's see whether we'll see some short covering towards the last 1 hour of trade or whether this trend would continue.
Volatility, as is the name of the game on the monthly expiry session, of course. But the other disappointing factor to start off the day has been that we have already broken below yesterday's low. So yesterday's low being 24,604, we've broken that and we slipped to levels of 24,593, from where in just the last few minutes we have recovered almost 60 points from those levels. So a proper expiry session playing out in just the first couple of hours of the trading session. As of now, the Nifty remains in the green at 24,650. The Nifty Bank is lending support as of now, so we'll keep an eye out on how the second half of the trading session pans out. The broader markets too, fairly okay. The stock-specific activities are more prominent there compared to the index. The broader markets underperforming as of now. The mid-cap index is in the red. So all in all, it's been a choppy start to the trading session.
All right, so that's about the action that's happening as far as the benchmarks are concerned. But let's talk about a corporate discussion. SolarWorld Energy Solutions made a good D-Street debut. It listed at 388.5 rupees per share. This compares with the issue price of around 351 rupees a share. Those are some visuals coming in from NSE. Karthik Teltia, who is the managing director at SolarWorld Energy Solutions, joins us now to discuss on a lot of things. Of course, now they can talk about forward-looking statements as well. So foray into modules, move away from traditional strengths, the current order booking trends as well, and also the breakup that they'll see between CapEx and Resco model going forward. Karthik, good morning. Thank you so much for joining in. Now that the stock is listed, you can give us more numbers going forward. What are the current trends looking like when it comes to your current order book, your current order inflow post the DRHP filing? What is the guidance in terms of top-line growth, profit growth? You've been looking at investing some of the amount in CapEx growth.
Good morning, ma'am. It is a very momentous day for us today. We have just got listed on the National Stock Exchange. We are very proud. All our employees are very proud. SolarWorld as a company, we will continue to be an EPC company. Our CapEx investments are directed towards backward integration. We have already set up a 1.5 gigawatt module manufacturing line. We are in the process of setting up a lithium-ion cell to battery pack line. And going forward, we are looking to put in around 575 crores, which is the object of this IPO. This will be directed towards setting up a 1.2 gigawatt solar cell line. So going forward, solar market is very, very strong. It is becoming one of the most mainstream sources of power in India. We believe that there's a lot of opportunity in the market. Our backward integration will give us a lot of strength to capture a bigger market share and to grow multifold from here.
Karthik, many congratulations first up on the listing. But my question being, you mentioned the fact that you're going to deploy a lot of your IPO proceeds towards that solar cell line. What's your rationale behind entering this space? Are you focusing more towards your domestic captive consumers, or you're going to set up opportunities for the export market as well?
Sir, we are focused on the domestic consumers only. We are not looking at the export market at present. The rationale is twofold for this investment. First is risk management. If you look at an EPC company, almost 40% of our cost comes from solar panels. As we backward integrate into solar panels and solar cells, that risk climbs down to about 8%. So in a 100 rupee contract, our volatility comes down from 40% to about 8%. That gives us a lot of strength, a lot of clarity when we are bidding for contracts or giving out prices to our customers. These tend to be fixed price contracts, and this is going to be a big advantage for us. Secondly, if you look at the market currently, We buy our solar panels from a lot of large players. They charge us they make between 12 to 14% margins. As we start doing this internally, that is going to add a lot to our margins as well. So, and thirdly, I would also like to add, this helps us becoming an end-to-end supplier to our customers. We can offer a complete turnkey solution. Solar cell ALMM2 comes in from June 26. We should be one of the suppliers at that time. That will give us a big leg up.
Okay. So, Karthik, two-part question here. You said once you backward integrate into solar cells, your margins can improve. It is at 20% currently. Where do you take it to in terms of improvement? When do you commission these facilities for solar cell? And, you know, analysts generally say there has been a lot of action in the solar cell segment overall, because a lot of big players are also looking at solar cell. Everyone wants to be integrated in the entire supply chain. Do you think that is something that could put pressure on the margins, because there's so much supply coming in, there could be an impact on pricing?
So, ma'am, what you're saying is absolutely true. There is a lot of interest in our industry. It is one of the fastest growing industries, but I would say demand and supply are kind of both growing very rapidly. In terms of margins, if you look at solar panels, you look at solar cells, the margins are tremendously good. I think the margins should normalize a little bit, and that would make solar projects more viable. So we are already accounting for that, and we believe that's a very good, fantastic market to be in.
And what happens to your margins? You said it will see an improvement. Big players see 12 to 14%. You are at 20%. How do you improve that post-commissioning of solar cells facility?
Ma'am, as I said, we currently spend 40% of our project cost on buying solar panels. So if you assume that people are making somewhere between 10 to 12% margins, we will not have to pay out those margins to our suppliers, because we have an in-house facility. So that margins should start accruing to us as a company, and that will definitely add to our PAT margins.
And by what kind of figure are you anticipating because of that? Karthik, do you see that 20% number going up to 22, 22 and a half, say over the next 12 months?
So EBITDA margins will be out in the market as we achieve them, but we definitely see this as a very, very good market. The margins we expect to be quite good going forward as well. I can give you an example. China, I think, did about 360 gigawatt of installations last year. Compared to that, India did about 40-45 gigawatt. I believe India's solar story is just starting, with BES coming in, and intermittency of power is not a problem anymore. So I believe this market will go from 40-45 gigawatt to maybe even close to 100 gigawatt annually. And that kind of says the story about this industry. It's a new type of technology, rapidly evolving technology. Good margins, a lot of interest from a lot of industry players. So it's a good sector, and we are very well poised. We are one of the companies that is EPC focused but has backward integration. That gives us a very unique advantage in terms of our cost, in terms of our ability to execute our projects.
So the 575 crores that you are spending for that cell capacity, Karthik, 420 you use from the IPO proceeds. Where do you fund the rest from? That's part one. And part two being, what has been your debt situation pre-IPO, and what does that happen going forward now?
So debt situation pre-IPO, we were net debt negative. So we were very well capitalized. In terms of this plant, we intend to take a debt of close to about 150 to 170 crores to execute this. But since this project is mostly equity funded, you will see a very good capital base. And the idea is to have a strong capital base having a good capital base, looking at the strong growth ahead of us. I think a good capital base would help us capture a lot of that growth in the market.
All right, Karthik, a lot more questions, but we have completely run out of time. But we look forward to the updates that come by from the company in terms of capex, adding new capacities, and a lot more. It was a pleasure speaking with you, and we'll touch base soon again. With that, we'll slip into a short break. Up next, we'll focus on the crypto market with Ola Duden from BitOasis on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
As promised, let's shift focus now to crypto space, and Ola Dudin, who is the co-founder and CEO at BitOasis, now joins us live on the show. Ola, hi, thank you so much for joining in. And you have a lot to your credit, really, on the kind of work that you've done on Web3 and blockchain. But I want to start with what's happening with Dubai right now, and you really seem to be expanding about, around, and far from Dubai.
Thanks, Manisha, for having me on the show. I'm very glad to be with you this morning. Definitely, we're seeing a lot of regulatory and adoption momentum in our markets. I wouldn't say just Dubai, but we're definitely seeing that across the Gulf overall. Obviously, UAE tends to be on the forefront, and they're definitely leading the wave of adoption. So we've seen several factors, I think, contributing to that. Regulatory clarity, positioning UAE as a hub, new use cases in terms of adoption of crypto, such as stablecoins and tokenization of real-world assets, most recently real estate that we've seen in the UAE. And I think also global regulatory developments, particularly in the US, such as the Genius Act, has been fueling more interest and adoption across the region.
Oh, well, absolutely. Ola, I want to take it ahead when it comes to the real-world asset classes, especially when it comes to real estate as an area. That really seems to be picking up. I mean, we have seen those instances in India as well, where you have real estate now being launched on blockchain as a technology. But as you said, Middle East and UAE, Dubai seems to be really spearheading that. Where would you see the future, let's say, in 5, 7, perhaps 10 years from now?
We're definitely seeing tokenization taking momentum. And I think us as a crypto platform that is regulated with different licenses across the Gulf will definitely see not just crypto assets being traded, but tokenization of money, such as stable coins, and take tokenization of physical assets and digital assets as well. That will be traded, exchanged, and then ultimately transacted over a blockchain. So we're definitely seeing that in terms of real estate, but we'll see that in terms of equities, bonds, physical assets such as gold. And we're definitely seeing some of that traction in other markets, and definitely Middle East, started with real estate, but we'll definitely see that in terms of other assets as well. So we're seeing that convergence, I would say, of the crypto world and the traditional finance world all coming into blockchain and ultimately being traded on platforms such as us, as ours, in terms of BitOasis, that will ultimately spearhead that adoption and distribution and liquidity, I would say, that being transacted and traded in those markets.
Ola, when you look at the overall markets, well, yes, we've seen a lot of push and a lot of enthusiasm as well in the last many years. But the last couple of years, would you say, is more about corporates, countries, institutions, family houses wanting their piece of pie as well when it comes to the technology or even the crypto prices for that matter?
Yeah, I think the Middle East market is following also similar trends to other international markets. So I think in the last couple of years, what we've seen is higher interest amongst the institutional base, or let's say family offices, funds, corporates, et cetera, either in terms of Bitcoin treasuries or diversifying their assets, or ultimately, essentially coming into the market by way of buying the asset itself or exposure through ETFs. So I think Bitcoin ETFs has definitely, in the US market, has unleashed that wave of institutional interest in the crypto space. So particularly in the Middle East, we've definitely seen a high interest from high net worth individuals, family offices, and ultimately even sovereign wealth funds. So, recent surveys and statistics says that over 90% of high net worth individuals and family offices have actually developed an interest in crypto and see it as a way of diversifying their portfolio. I think in the last year, recent filing has shown that Mubadala has increased its stake in BlackRock's Bitcoin ETFs. And then ultimately, the Central Bank of Saudi has invested a small portion in MicroStrategy as a way of being exposed to Bitcoin. So I think we're definitely seeing early signs of serious institutional adoption in terms of sovereign wealth funds and funds overall. But I would say high net worth individuals and family offices have already built exposure into the asset class that we would actually forecast and predict that will continue growing as the asset class becoming more of a legitimate asset class in the sense has a place in the investor portfolio, but also with regulation being in place, I think that increased the trust from qualified and institutional investors to actually directly invest into the asset.
Well, absolutely. Well, I was reading a report in US, especially if you're not holding or invested in some part in sense of crypto or blockchain, then you are seen as an outdated business. Well, that perhaps is what we're looking at coming now. But my final question to you is about from here on, what is that BitOasis is looking at as a company, let's say 5 years down the line? And second, you spoke about regulatory. When it comes to crypto or blockchain as an asset class, how much regulation is too much regulation or right regulation? How would you read that?
Yeah, so in terms of our aspirations as BitOasis, so we've been the first and we want to continue being the largest platform in the region. And we say the Middle East, it's across the region and not just in the Gulf. As obviously regulatory clarity continues to develop across the region. We're seeing most of that in the Gulf, where we've got 2 licenses in the UAE and Bahrain. But we want to continue being at the forefront of adopting crypto and allowing retail and institutional clients to invest into the asset, but also be the gateway to Web3. So we definitely see ourselves as a major player in essentially driving the wave of adoption of crypto assets, be it in terms of Bitcoin and ETH and other the crypto assets that we see in the space, stable coins and other tokenized assets that we will see developing over the next few years. So we definitely want to be the gateway that is allowing that adoption of crypto assets across the region to hundreds of thousands and millions and tens of millions of customers across the Middle East. So that requires robust regulatory frameworks. And to your second question, regulation is very important to allow players like us that are serious about building that infrastructure, Web3 infrastructure in our markets, to really flourish and be able to drive that adoption safely in a regulated way, but also focused on consumer and customer experience and allowing seamless adoption and integration of this technology in our daily lives. So we're always, advocating for friendly regulation that allows innovation, but at the same time, we really prioritize consumer protection.
That point is well taken, Ola. Very, very appreciate you. Thank you for joining in and making sense of what really is happening, especially in the Gulf area and, of course, overall the world. And as your point is well taken, that friendly regulations is what perhaps this developing technology needs at this point in time. But with that, that's a break on this segment. We'll come back with more news and stock specifics on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Just before we went into the break, I saw the screen and I said we'd be mentioning the fact that the Nifty is off the day's low and heading back towards the 24,700 mark. Unfortunately, that's not to be. And that recovery has been very swiftly sold into. That's how quickly the sentiment in the market has been changing on this monthly expiry day. And analysts also have been mentioning the fact that every bounce towards levels of 25,000 or even 25,200 for that matter should be used as an opportunity to sell, as we spoke to Jay Thakkar yesterday and he was of this view. But what are the charts indicating on this monthly expiry day for the future? Sneha Seth from Angel One is joining in with a quick chart check. Sneha, good morning. Thank you for joining in. It's very, very volatile right now on the Nifty. What are the important levels that you're watching out for? And if we do end up breaking today's low at 24,590, where does the index head to? And your stock recommendations for the morning.
So very good morning. Yes, if you look at the index, it has been volatile, but it has been trading in a range. So broadly, I would say that 24,500 on the lower side, 24,800 on the higher side is the resistance zone. So this 300 points is the range for Nifty for now. And looking at the options activity, I think on the higher side, 24,700 is attracting decent pile-up of positions on the call side, and on the put side, we are seeing decent writing happening in 24,600. So at this point in time, I think this 100-point range would be there for the for today's monthly expiry. Not expecting a major move for today. So as far as both the index, if you see the banking index also has been trading in a range. So until and unless we don't see some clarity on the direction front, one should stick to individual counters. Now, as far as individual counters are concerned, I believe metals have been doing good. So I would suggest buying National Aluminium, which NALCO has been, showing decent strength since yesterday. It has rebounded from the strong support zone placed around 200 zone, and now I believe it is poised for a move at least towards 215, 217 is the level which I'm watching. So for the target of 217, it's a buy. The stop loss can be maintained around 205. Apart from that, PSU Bank has been doing good, and Bank of Baroda is one of the counter which I'm liking since quite some time now. This counter, if you see, has made a very strong base around 230 zone and has given a very strong up move. Has also managed to surpass the resistance zone placed around 257, 256 zone. And I believe this counter is heading towards 267 zone. So it's a buy for the target of 267, and the stop loss can be maintained around 252.
All right. Thank you so much for joining in with those chart checks and individual names as well. Let's go across to Mangalam now. He's bringing us the latest trends from the F&O space this morning. Mangalam, a lot of action there?
A lot of action there, and importantly, it is also the monthly expiry for September series, the first one that happens on a Tuesday as well. So it will be very interesting to watch how that goes, especially as the mid-cap index is underperforming, but the frontline index has been, held supported by both the Nifty Bank as well as the Nifty IT index. So the IT index yesterday and today as well has been doing okay, so that supports the frontline index. The important part to watch out for, though, will be whether we cross past today's high and go closer to yesterday's high on the frontline index or not. Because yesterday's high on the Nifty was close to 24,791, which is around the 24,800 mark, and September 30th, which is today, was significantly lower than yesterday's high at 24,732. So the first mark on the way up would be today's high, and thereafter would be yesterday's high as a mark of reference for where the index can go towards expiry. But ahead of expiry, it is going to remain volatile. Yesterday was a fairly volatile session as well, and that's reflected in the way the India VIX has moved today as well. Up around 2.5–3% as we speak, close to around 11.5. So that's something that we'll be watching out for. Importantly, on options expiry day or monthly expiry days, the option writers get fairly active. So 24,700 call. That's the one that should come up for you. That's been fairly active in today's trading session in terms of trade. And the writers of the 24,700 call do believe that maybe there would be around the 24,725 to 24,730, which is closer to today's high as a resistance. But at the lower level, today's low and a little below that, 24,600 put has been equally active. So around 24,575 to 24,600 is where the support lies. So it will be a range-bound trade between about 100–140 points, as the technical experts were explaining as well. And the option writers don't believe that, 24,550 to 24,750 would break as far as this expiry is concerned.
Range-bound expiry is what we are anticipating. Mangalam, thank you for that update from the F&O desk. Take a short break, continue our conversation on the markets. Viraj Mehta of Enigma Investment Partners joins in on the other side.
Welcome back. You're still tuned into Trading Hour. Well, autos continue to be on our radar. First was the GST cut, and tomorrow we have the auto sales numbers as well, which we'll be tracking. And do remember, September was a mixed month. The initial days, we saw the impact of Shraddh, but come September 22, we saw the impact of that massive GST rate cuts as well. And that is something which led to pent-up demand across segments. So we did get some commentary from the companies as well. For instance, Maruti said that 75,000 unit retail sales is what they saw since the start of Navratri. they continue to get 18,000 bookings per day and 80,000 inquiries across its distribution network. Hyundai said they saw 11,000 dealer billings. Tata Motors said that number for them was 10,000 deliveries and 25,000 inquiries on the first day of Navratri itself. For Hero MotoCorp, they indicated they expect double-digit growth during this festive season itself. Now, we looked at some Nomura estimates, and industry-wide, in the PV industry, they are looking at sales of 5% on a YY basis, two-wheeler sales up 7%, and medium and heavy commercial vehicle sales up 7% on a YY basis. Now, let's look at individual companies. For Ashok Leyland, it is expected to be a decent month, 6.8% growth on a YY basis in terms of sales. For Bajaj Auto as well, total sales are expected to go higher by 6.5%, out of which domestic two-wheeler will not contribute so much. It will be 1.8% gain there, but exports will see strong growth. That will come in at 11.9%. For Eicher Motors, Royal Enfield will drive growth this time, 55% higher this time, while VECV will see growth of single digit at 5%. If you talk about Hero Moto, total sales are expected to grow by 2%, this time around at 6.5 lakh units. For Maruti Suzuki as well, total sales expected to go higher by 2.6%. If we talk about M&M, their total sales expected to go higher by 7%. However, their tractor sales are the ones which will do well. A good monsoons and the GST rate cut that came on tires as well and across the value chain for agriculture. So that will see a growth of around 12.5%. Tata Motors, where total sales are expected to see a strong growth, 12.8% there, while CV sales will be up 7%. The passenger vehicles, because they spoke about strong demand, expected to go higher by 21.8%. Let's talk about TVS Motors now. Total sales, according to Nomura, should see strong growth, 13.9% there. And for Hyundai, total sales are expected to go higher by 7.5%. So anywhere between 2 to 7% or even 12% in certain cases. That's the kind of growth that the auto segment is going to look at. And we'll watch out for management commentary. What happens post the festive season? How are the trends looking?
The most important thing to watch out for, right? The road ahead for these auto companies. You take that conversation forward with Viraj Mehta of Enigma Investment Partners, who's joining in. Viraj, good morning. Thank you for joining in. Tomorrow is possibly D-Day, right, for a lot of these auto companies, the way they have run up after this GST reform. Do you still justify the kind of moves that you're seeing? Because despite that move, a lot of them are now coming off their highs. And what's your call here on the auto sector?
So, first of all, good morning. Thank you so much for having me on your show. So, I think auto in general, you cannot treat it as a very homogeneous sector, right? You have to think about it as a heterogeneous sector. On one side, you have two-wheelers, which will see significant demand and which has seen significant pent-up demand, and in four-wheelers as well. But a lot of it is actually reflected in the price that we saw. And I think market has pretty much factored a lot of that growth in. So we have to see how the demand of these autos sustain. It's just, I think these are one-off numbers. And we are not very sure about the sustenance of these numbers going forward. If these numbers sustain into October and November, then we will see probably another leg of rally. Otherwise, we do not see significant upside in auto manufacturers or OEMs as such. But if you see ancillaries, I think there are a lot of plays in ancillaries which are better plays in our mind, because they are gaining, or they have sharper focus on certain segments and they are gaining market share. So in our view, that is a better space to look at rather than just the OEMs, because there the upside is pretty much capped.
All right, so that's your take on the auto space, like the auto anchs more than the OEMs. Viraj, I was looking at your recent portfolio as well. You've added Parag Milk Foods. Is it because of the reforms that have come by in the dairy sector because of GST cuts? What's your rationale here?
We have been positive on dairy for a reasonably long period of time. One of the other dairy companies, Heritage, was part of our portfolio earlier. But what we do believe is that with the recent GST cut, the price differential between organized and unorganized will significantly reduce, especially in value-added products like paneer, ghee, and cheese, significantly, especially in ghee and paneer, where unorganized is a very large portion. Just to give you an example, we is a 75,000 crore market, out of which organized is only 5,000 crores. Now imagine the kind of penetration organized players can potentially have when you will see the price differential between organized and unorganized significantly reducing. So we see this as at least a 6 to 8 quarter tailwind in terms of growth for value-added products for dairy sector. And within that, if you have to look at plays, I would say Parag is right up there because a value-added is significantly larger portion for them compared to milk, which will be larger for other dairy players like Heritage or Hatson. For Parag, it is close to 55-60%. So which is where we think the delta in growth is going to be. Also, we think this should lead to decent margin improvement because of operating leverage that they will have in the system, which is already built in. So, and the valuations are less than 0.7, 0.8 times current year sales. So you will have tailwinds of growth, plus you will have margin expansion and you have valuation which is in your favor. So, which is why we like dairy sector in general, but we like this name slightly more.
Right.
Just the disclosure is that obviously our fund and us personally, we own significant chunks of this company.
Right. Very quickly, Viraj, we're running out of time, but iron and steel products is another very important allocation to your portfolio. Where does your preference lie here? Are you preferring the larger names, the Hindalcos or the Tata Steels, or you go into the smaller names such as the Godavari Powers and the likes?
So we do not really have any direct exposure to OEMs again of ferrous or non-ferrous. So we like actually converters in this space. Obviously, I also think that some of the OEMs that you did mention will also see profitability improvement over next 6 to 12 months. But we think the end usage of these products will have sustained volume growth over next 3 to 4 years. So that is where our play lies. So we like steel pipe manufacturers, which are nothing but actually converters of these players. We like distributors of those steel pipe manufacturers. So that is where our play is, because they will have sustained high ROCs, sustained high cash flows, which we think will lead to significant re-rating that we have seen in some of the other industries which have followed similar paths in the past. So our play in metals space, especially in steel, is not the OEMs like the Vedantas or Godavaris that you, or rather SAIL or Tata Steel that you mentioned, but the pipe manufacturers and the distributor of the pipe manufacturers rather.
All right, take that point, Viraj. Always a pleasure speaking with you. Thank you so much for joining in and taking our time to explain the rationale for the holdings in your fund. Time for a short break now, but don't go anywhere. We'll put the spotlight on the big story of the day on the other side. Welcome back. You're still tuned into Trading Hour. The big story of the day has to be the action that we're seeing in the primary space, the strong pipeline of IPOs. We'll put spotlight on the recent listings as well, and the focus on today's listings as well. There have been quite a handful of them. Hormus, take it over with the basics first up.
4 listings today, and all 4 listings have given you one major takeaway, is the fact that a healthy IPO subscription may not necessarily translate into a healthy listing. We have witnessed all of that in today's 4 listings that we have had. We had 4 today. Anand Rathi is one, Jaro Technologies is the other, Seshasai Technologies is the third one, and SolarWorld Energy. Now take a look at their subscription figures. By the size of their IPOs, their subscription figures are fairly decent, anywhere between 15 times to even Seshasai Technologies was subscribed almost 70 times. But take a look at their listing. Anand Rathi listed just above its IPO price, as did Seshasai, and Jaro Technologies listed just at its IPO price. And now, after listing, Jaro Technologies is down almost 18 to 19%, and barring Anand Rathi, the other 3 have already slipped below their IPO price. So it's not necessary that if your IPO has seen a healthy subscription, it may also witness a healthy listing. Of course, it's early days, but today's listing may not have pleased all those who received the allotment for sure.
Oh, absolutely. So let's specifically talk about September, the number of IPOs. What has the performance been like? Because there have been some big ones as well.
Big ones indeed. And you take a look at September itself, it's the biggest IPO month of 2025 so far. We have had 25 IPOs, including one that opened today. So 1/3 of the total number of IPOs that we have had so far in 2025 have come in the month of September. Now, if you take a look at the listings that have happened, now out of these 25 IPOs, 15 have listed. And 5 of them are already trading below their IPO price. And this I am not discounting for the fact I'm not taking in today's listings. So 5 of them trading below their IPO price. And you take a look at the issue size also. It's not, take a look at their issue sizes. The biggest issue size has been 1900 crore. I need to get that changed. 1900 crore has been the biggest issue size this month that we have had. And the IPOs of over 1,000 crores have been only 2 of them. But 16 out of these 25 IPOs that have come out in the month of September are priced less than 500 crores. So a lot of these smaller IPOs are making a dash to the primary markets. There's one standout name that you can find in September's IPOs has been Urban Company, without a doubt. Healthy subscription, a healthy listing. But of course, even after hitting a post-listing high of 201, that stock is also down 20% from that post-listing high. So you're seeing some profit booking in Urban Company as well. So those IPOs that have done well are witnessing some profit booking. They are coming off the highs. And of course, so that is one standout that has been there. But otherwise, it's just been a rush. At one point last week, there were at least 9 IPOs that were open simultaneously for subscription. So it goes to show the kind of activity that you're witnessing in the primary markets, and there is no specific trigger behind this as well.
Oh, yes. And I think the pipeline looks similar.
Pipeline looks similar as well. But, the bigger takeaway of the IPOs that we have had this year so far is that a majority of them has that done anything for investors? For majority of them, the answer is no. Because out of the 74 IPOs, we have 34 or 35 of them that are either trading with single-digit gains from their issue price or below the IPO price. So 9 of them are trading with single-digit gains out of the 60 listings that have taken place so far. And 25 of those 60 listings are trading below their IPO price. That goes to show the kind of activity that you have seen. Now, even if you take a look at the returns as well, only 2 IPOs that have listed so far this year have returned more than 100%, or they have doubled from their issue price. And the rest, 25 to 50%, 10 to 25%, 9 each. And the bigger number, of course, is the ones that are below their IPO price, right? At 25 IPOs. And it's not as if the market sentiment is so positive and markets are making record highs is why you're making a beeline to the IPOs, as what was the case in 2024. Now, even we are coming to the end of this quarter, the Nifty is down 3%. And yet, in this quarter, the July to September period, we have had 50 IPOs that have come out. So that goes to show the kind of activity. And of course, the primary and the activity, the pipeline is the same, right? Tata Capital opens next week. WeWork opens this week. There are IPOs like Physicswala, Prestige Hospitality, Prestige Hero FinCorp that is lined up as well. So not dying down anytime soon. This primary market activity is certainly spilling over into the fourth quarter as well.
Quite strong there. Thank you so much for making sense of that entire space, Harmiz. But with that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets on the other side.
Well, very choppy, as has been the case all through these last 60 minutes. The Nifty is back into the red now after seeing a brief intraday recovery. The important level to watch continues to remain today's low of 24,593 on this monthly expiry session. We take your leave on this edition of Trading Hour from Sonal and me. Thank you for watching. Halftime report on the other side.